Hey everyone, I'm John Robinson. I'm the CEO and co-founder of Blueprint. Today's August 31st, 2021, and this is a monthly asset allocation update video. This video is produced to be a supplement to the longer form written piece that we do every month, where this month we cover the difference between US stocks and pretty much everything else. But we don't just stop there. What we do is we take that and we turn it into something that you can use, which is that by using a Blueprint portfolio, you have the ability to systematically and tactically underweight foreign stocks and emerging market stocks and hand that exposure up to US, thereby overweighting US stocks like we've seen a lot this year, last year, and really since inception. And so we give you those talking points because we produce these videos for you, and we want to give you the ability to take something from this to benefit your practice. With that, the exposure changes as we head into September are minimal and really non-existent. We like this, right? You've heard us say in the past that we prefer a very boring existence as money managers. And that means that in most cases, if it's boring, that the trends are persisting one way or the other, and volatility is doing the same. And so when you look at US markets, there's no change to exposure. US markets remain the strongest markets, strongest equity markets on the planet, particularly the large caps. International and foreign developed and emerging markets, there's no change to exposure, although we're getting close, particularly in emerging markets on the long-term side. But going into September, there's no change. We remain in rising trends in foreign developed and falling trends over the intermediate term time period in emerging. Real estate, there's no change. It continues to be the strongest asset class in the portfolio year to date. Fixed income, which has somewhat been interesting and counterintuitive as rates have fallen back down, sending bond prices up. There's no change to exposure. We're close, but heading into September, there's going to be no change to fixed income exposure. And that includes inflation protected bonds. The inflation dialogue and noise, if you will, continues to be really at a fever pitch level. TIPS have performed well, and they remain in slightly overweight in that they have a long-term and intermediate-term uptrend, but none of the other none of the other fixed income components are handing up, so it will remain constant heading into September. Short-term fixed income isn't really in the same boat, no change, and in our alternatives bucket allocation, there's no change as gold is still in a downtrend in both the intermediate and long-term. So you look at this on a graph, again, everything is holding constant as we head into September, and that's the way we like it. So key takeaways. The first is US equities remain the strongest in the world, particularly US large caps, and that's followed by mid caps and small caps when you look at strength in terms of their risk-adjusted strength or their absolute performance year to date. No changes to the allocations in September. Boring is good for us. And then lastly, I would just ask you the question, what is your process? We believe in a predefined systematic process for allocating capital and managing client assets. And if you don't have one, I would just say to you that if you make the choice to not predefine what your process is, at some point, that lack of decision will define you, and it will define your practice. And it'll do so in a couple of ways. Number one, in terms of client management. Allowing clients the ability to understand your process ahead of time will not only help you set expectations for prospects, but also for current clients. And as the markets have been in this really homogeneous or monolithic state since the middle of last year, you need to anticipate not the when markets will change, but if markets will change and when they do. And it's our belief that markets will change. Volatility will pick up. The US markets at some point will decline. And if you don't have a predefined process for that going into those environments, that'll really hurt you for the second reason, and that is the investment performance reason. Remember, as a financial advisor, your income, your fees are tied to your assets. So leaving your assets or your clients' assets susceptible to large declines not only impacts your clients in the achievement of their goals, but it impacts you and the value of your business and your income. So if you don't have a process, I'd encourage you to reach out to us. We can help you define what your process should be. We can also tell you a little bit about our process in doing so. So what can we do for you? Right now, we're doing a lot of white labeled content for the advisors we work with. We're also jumping on a lot of calls with advisors as we head into the fourth quarter, not only to review where we've been and talk about some of the hot button issues like interest rates, inflation, and what seems to be this never-ending bull market in U.S. stocks, but also talk about what's to come in terms of taxes, in terms of some of the other legislative issues that are on the horizon for 2022 and beyond. So if any of those items or issues are on your mind, ask us. We'd be happy to jump on a call with you and your team or you and your clients to answer questions. Trust me, for us, nothing's off the table. So please just reach out to us and ask. And you can do that by going to blueprintip.com. You can access us on LinkedIn, Twitter, or by sending us an email or just giving us a call.